Everybody, it's Shannon from alphatrends.net. Today is Friday, the 21st of February, and we had a little bit of profit taking this week, mostly today. Energy names were higher. Bitcoin gained a little bit, but that's looking a little bit shaky right now. And Russell 2000, which we've been avoiding, continues to be the worst. It's down 3.5% this week. So let's take a look at these charts and make some sense of it. Here's the S&P 500 daily chart on the left, and you can see that we broke out to a new all-time high. On that day, we were bullish, as we should be, but always cautious, thinking that if it had broken below this low right here, it set up the possibility of, from a failed move, could come a fast move lower, and that's exactly what we got today. So Alpha Trend subscribers were aware of that and not surprised by this pullback. Maybe the magnitude of it surprised us a little bit, because I thought we would probably come down to this anchor off of the month-to-date low, but we continued lower, and that's why I'm never a person who will tell you to buy the dip and say, hey, we have to, bounce from this level. It's a level of interest. That's all it is. When it pulls back to there, we look for evidence on the shorter term time frame to say, is there actually evidence here at 604.5 that the buyers are gaining control? So we look at a 5-minute chart, for instance, and then we take a look there at 604.5. There was zero evidence that the buyers were gaining control there. We've seen, throughout the day, just a solid pattern of just the most basic definition of a downtrend, which is, of course, lower highs and lower lows throughout the session, maybe trying to stabilize here a little bit at the end of the day, but going sideways isn't bullish. Going up is bullish. And when you have the market selling off like this, you look to say, where does it have the potential to find support, enough demand to become support? Well, the 20-day moving average is a level of interest, but it's sliced right through it. The 50-day moving average is a level of interest. It's right on that now. There's no guarantee that's going to hold, but just below us, I think that, early next week, if we sell off a little bit deeper, we're at that key psychological level of 600. Maybe we undercut this prior low and come down through that orange anchored volume weighted average price, which of course is from the election, and this thick blue line is the anchored VWAP from the beginning of the year. So maybe we come down to 596-ish or so, scare some people, and then see the market rally a little bit, and then we'll see if if the market then, let's say, on the 30-minute time frame, if it gets stuck below a declining 5-day moving average, then we're likely to continue lower. If it holds on, then great. We can think about it more constructively. But right now, we've seen a very choppy market this year. Earlier, last week, we came in to the beginning of this week. Meta had 17 days in a row where it was higher, and I didn't get involved in that trend, but the point is, I was telling people, listen, this is a great trend. Enjoy it if you're involved. As long as it's making higher lows above that rising 5-day moving average, stick with it. Know your risk management, because a deeper pullback is likely. And once it broke that 5-day moving average, it lost another 25 points from there. That's a significant pullback. So where's Meta going to go? I think it's likely to touch the anchored volume weighted average price from the beginning of the year, but I wouldn't buy it there. We've seen this week that a lot of stocks are pulling back and they're not bouncing. So, you look at Robinhood, it's through its anchored volume weighted average price from the beginning of the year. That's a big percentage move from 67 down to 51. You look at Pega. Here's another, stock that was a high-flying growth stock, and this one made lower highs and lower lows below that declining 5-day moving average. It gapped lower. People were trying to buy the dip. There's no reason to try to buy the dip when we're in a downtrend. Same was true with Taser. Axon, it broke below the declining 5-day moving average in support and got its lights, knocked out. Deck, this one as well. They came out with earnings back here, and it's been stuck below this declining 5-day moving average ever since, causing a lot of damage to people who think that it's a good idea to buy the dip. There is a problem here in this market right now, and the fact that we're losing so many of these leading stocks is telling you that the easy money for these bigger names is kind of ending right now. Roblox, SMTC was one. Affirm is another one that's maybe failing. Broadcom may be failing in here. They just don't behave well. So the market is telling us to be cautious. And if you recall back in December, it was the low price stocks, those $2, $5 stocks that went to $10, $15. We had that very speculative theme in the or set of themes really with things like the robotics, drones, and that sort of thing. Quantum stocks, they have all shown that the market had a high level of speculation, and then the bigger names really started to outperform. But once those bigger names, same thing here with Palantir. Palantir broke that pattern of higher highs and higher lows above the rising 5-day moving average. It caught a bit at the anchor from that low, which is why we always put anchors at important lows and highs. It sliced right through the anchor from the earnings report. So those are levels of interest. Then you look to the shorter term time frame and say, is there a trade opportunity in there for me? That's up to you to decide, and that's what I provide guidance on every single day for $10 a month at Twitter, X, and more so on alphatrends.net. Anyways, let's go back to the Nasdaq, because here we see the same story. We've undercut the anchor from the CPI and from the tariffs. This is the DeepSeek, and are we below that anchor? We're right on that anchor from DeepSeek right now. Doesn't mean, you can't look at this and say it has support there. People always say that to me. They say, hey, Brian, look at where it's bouncing from. That's not bouncing. That's just probing a level right now. It's a level of interest. Is there actually any evidence that the buyers are gaining control? No, just like the S&P 500. It's going sideways here, but it's below the daily VWAP, the 2-day, the 3-day, the 4-day, the 5-day volume weighted average price. There are net sellers in here. It's below declining 5-day moving average. It got sold off pretty hard, down 2% today. So, maybe we get a bounce on Monday and it gets people excited, but monitor the quality of that. If it does this and then continues higher, great. Then set your stop under here. But if it breaks back down, then be very careful, because I think that this market is likely at some point in the next week, maybe it's in the next 2 weeks, heading down towards the anchor from the election. And people always, I'll say these things, and it's up to you to decide. Do you want to, watch it rally up and then sell short as it drops back here, maybe buy some puts? That's up to you to decide how to implement the trade. But that seems highly likely that we're going to come down to this level. The question is, can you find a trade in there where you can manage risk? Russell 2000, all year I've been calling this thing a waste of time. We've looked at it as a potential that it could get going. And if you recall, just a couple of weeks ago, about a month ago, when we broke out right here, I was very careful saying, look where we rallied from. Do you want to buy this breakout when it's extended? And my answer was no, you don't, because we have the possibility that from this failed breakout could come a fast move lower. And here we are now coming down all the way to the 200-day moving average once again. We have a declining 20-day moving average, a declining 50-day moving average. It is just a broken market, complete waste of time. People are trying to buy this thing thinking that, the Fed's going to, cut rates and that's going to be good for small caps, was the argument for, the last year or so. And we're not really seeing that. And most important, only price pays. And the Russell 2000 is a downtrend. If you like losing money, go ahead and try to get involved in it. Otherwise, if you're a near-term, shorter-term trader, it's really too choppy. I look at it and see, look at all these moving, crosses back and forth above and below the 5-day moving average. It's too choppy for me. When it's indecisive like that, it tells me clearly just avoid it. Semiconductors, I mentioned yesterday to subscribers that we're getting this rally. It's up at the top end of the range, and we have come pretty far, pretty fast. So, this is where I've been suggesting you keep raising your stops up under. Yesterday, I suggested the stop goes here. So, you get out at 255. If you're long, let's say you're long at 249. Some people say, oh, wow, I should have sold it at 259. That's not the way that you look at it. You look and say, The definition of trend on this intermediate term time frame has changed. It is no longer a pattern of higher highs and higher lows. Instead, we had this high, we had a lower high, we had this low, and then a lower low. That's when the definition of trend is broken. That's when it tells me it's time to move to the sidelines. There's no reason to be involved. So, these semiconductors remain in their range. There's really no advantage to being a buyer of them in here that I can see. You look at NVIDIA, they've got earnings due on the 26th. It's had a big run. Probably going to settle down. I would bet that it comes down to this level prior to the earnings report. I will update this on Twitter at some point next week for free as well, but prior to the earnings. So be sure to follow along over there. What some of the key levels. Tesla is doing what it's supposed to do. This stock, it's broken. It's below the anchor from the election. That was the major catalyst that changed the perception of this stock based on Elon's relationship with Trump. And we saw for a while that, same thing over and over again. So more time support is tested, the more likely it is to fail. It failed, and it failed miserably. Then it had a low volume bounce right up here. It looked like maybe it could continue higher, and we saw the same thing. We saw this pattern of higher lows broken. We got stuck below the 5-day moving average, and most important, we broke below the anchor from this low. What does that tell us? It tells us the average price since that low, the average price of the buyers, the average price of the short sellers is about 350, let's just call it. So that tells us the short sellers are in control. Anyone who averaged up on a short sale is feeling good. Anyone who was buying in here is now down on average. Not everyone, of course. Some of you bought it down here. And if you have your stop down below there, that's really kind of foolish. You should have been stopped out here, because what we often see is we get a brief undercut of that, hit your stops if that's one of your stops, and then we get a quick reversal, and then maybe it comes back down to the anchor from this August low. But Tesla's in a downtrend. Leave it alone unless you like to lose money, or if you're a short-term day trader who's making money on this volatility, then that's great. I talk from a swing trade perspective always. Biotech stocks, they ran right into supply, right where they were supposed to at the 200-day moving average and that anchor off of the election. They are now in a position where they're looking likely to continue lower. Absolutely neutral at best, but probably heading lower from here. Financial stocks, they are undergoing some profit taking. They undercut this low, so that pattern on the daily time frame here of these higher lows has been broken. I wouldn't be surprised to see them, and maybe it bounces a little bit along the way, but I think it's likely it comes down to the conjunction of the 50-day moving average, that's the blue line in there, thin blue line, the anchor from the election, and of course that round number of 50. So that looks like it's most likely heading there. Energy names pulled back in here a little bit today. They've just been very choppy. Let's take a look at Bitcoin. Bitcoin, I've been out of this for about a week and a half now, and I continue to believe, and actually my belief is stronger now, that we are going to break down. Why is my belief stronger? Well, we had a bounce this week, and it rallied right to where we were looking at as this is an important level. And go back to last week's video. I was talking about we've got the year-to-date anchored VWAP, this light red line. The anchor off of last year's high, the black anchor off of the all-time high, that we're down here again. Just like Tesla, the more times support is tested, the more likely it is to fail, and we got a bounce. It got rejected right where we're supposed to. Now maybe we see something like this. I've got a bid in here for a little bit, and then I've got a bid for a little bit more down here. And actually, if we back it up a little bit, the bigger level where I think that in Bitcoin, by the way, crypto is the only market where I buy the dip. I do not buy the dip in equities. I only buy the dip on these strong sell-offs in cryptocurrencies. So that's where I'm thinking we're headed. I'd love to see it come down to 81. I know that, frightens a lot of people, and you might think I'm a jerk for thinking that, but I'm in cash, so I want this at a lower price. Anyways, thanks for tuning in. Have a good weekend, and that's all.